Hi, everyone. Bill Fairman with Carolina Capital Management. I'm here with Jonathan Davis, who I can't touch because we're supposed to be separated.
Get a little more space there.
And once again, just like last week, the camera always puts extra pounds on you, so we really look closer than we are. So we're definitely at a safe distance. It's time for another market update. I want to introduce our guests around the horn. We're still waiting for Mike, but we got Mike Slotnick of Tempo Funding. He'll be joining us shortly. Jacob Vanderslice of Van West Partners, Glenn Strongberg of Strongberg Investment Group, Fuquan Bao of and I don't know why I always get so hard to say this, Fuquan, NNG Capital, Chris Miles of Money Ripples. So let's get this train wreck going. So guys, and we'll talk about the CARES Act, and it's also called the Paycheck Protection Plan, or
PPG
something like that.
Or something like, yeah.
We'll talk about that in a little while, but right now people are talking about liquidity, hoarding your cash, waiting to do things. I mean, I'm a big proponent of making sure you have plenty of dry powder.
Absolutely.
So I'm going to start this off with Chris, and then we'll go around the horn. For real estate investors with hard assets in place now, they may have hard assets, but they're looking for liquidity. In your opinion, what is the best way to get liquidity or to get liquid now, especially with the markets and kind of how they're paused?
It depends on which hard assets you have. I mean, if it's real estate heavy, it's actually in some ways kind of a seller's market right now, where depending on the price point and what kind of property you have, I've noticed like in the single family space, like there's people still having bidding wars right now over properties, because with the virus and everything, people have pulled their properties off the market, which of course now allows less properties to be there. So it kind of allows you to stand out before people put them back on. So I think that's one of the great ways to do it. Again, I've been a big proponent of, while you can, try to get equity out of properties, including your own home, things like that, just so you have that liquid cash available. You can always pay back a loan later, but cash is going to be essential during this period of time.
Excellent.
Thank you.
How about you, Fuquan?
Yeah, I definitely agree with Chris. Lines of credit, if you have good rates on your credit cards, you can pull cash from that. If you have equity in the property, you can reach out to private investors and try to create a short-term lending opportunity from private investors. There's still a lot of investors who got hurt in the stock market and looking for opportunities in the real estate alternative asset world. So, if you can attract that private investor and structure a short-term lending structure for them, I think that would be, beneficial to give you the liquidity and also give the investor a short-term opportunity.
Well, that's a good point there. I didn't think about this too. You can actually sell some options if you own a bunch of property.
Yeah,
you could sell some options to folks and create a little bit of liquidity that way. Glenn.
Yeah, really same thing. I would say, lines of credit, obviously, I think it's a good thing to take them right now. Why banks are still, if you have them, take them. You could always just pay it back if you don't need it. And then there is a lot of private money out there. I'm getting about a call every day now from people who are getting burned in the stock market. So there's a lot of private money out there. And I think there still is a lot of commerce, and, you can structure deals with private lenders and free up equity out of houses. And, those are the two ways that I would do it.
Yeah. And we'll talk about the opportunities, in our business, in the alternative space, the real estate space in a little bit. Jacob, you're up next. What do you think?
Yeah, we've already touched on lines of credit. That's an obvious one. But if you don't have a credit line now, it's probably going to be hard for you to get one. So we're focused on private debt and private equity. We're seeing a lot more of that available out there right now, even as the credit markets feel like they're seizing up. To your point, Glenn, people are getting tired of the boom and bust of the stock market, and they're moving their investment accounts into hard assets that create current cash flow. So we're staying liquid by being responsible with our leverage, pulling on our lines of credit, and just raising additional private equity for our deals.
Excellent. Mike, I'm going to tell you the question since you just joined us. The question was, if you have a lot of hard assets, but you're kind of cash poor, what's a good way to become more liquid?
It's a great question. The number one exercise is go through your relationships, identify folks with capital, and talk to them about selling them some equity. So the possibility to take on a partners to achieve liquidity is not a bad idea if you can get access to lines. So bank lines are frozen, most of them. Well, sorry, they're not frozen. The new lines going to be hard to get. The existing lines. What's most interesting is if you have a relationship with a bank and you have strong track record and you have the right balance sheet, you may actually get your line increased. I mean, that's the experience with us. Our banker is likely going to increase our line. But if you don't have a line and hard to get bank money, you can try to find private partners to sell them some equity or lend you against the equity. There are a few sites out there, I've not used them, so I can't give you any other comments other than they exist. Institutional players try to buy equity in your property. There's a point.com, just give you an example. They basically give you essentially hard money rates, expensive money, and then they buy a piece of your equity. So, but it's an access to liquidity. If you can't get lines of credit from banks, if you don't have existing lines, can't find private buyers to step in and buy a piece of your assets, then you wind up going to some of these third-party shops. But I do know that they operate, and I've received some of their letters, the properties where they want to buy a piece of your equity. So it's a liquidity, probably not the best price, but it's a consideration.
So are they going in as kind of equal partners based on a percentage of what they're doing, or is it more like a
Yeah, so
secondary?
the point.com is one of the shops. There is also is another one. What they do is, if let's just say you own, let's use an example, a property that's worth $1 million, and you have only $500,000 mortgage, so you have $500,000 equity. In theory, you could sell them, say, $250,000 of that for 50% ownership.
Okay. All right. Nice. So I noticed that you were sneezing a little bit there. Please tell me you got allergies to that cat of yours.
Yeah, I'm in New York. It's a little scary nowadays, so I don't know. Hopefully, I don't have the coronavirus. I don't have the fever. That's the good news. I have a little bit of seasonal allergies. So
because there's plenty of people that still get the cold and the flu.
And that's the allergy season, and I have severe allergies during the season, and I usually get allergy shots, but the dock is closed. So
Yeah, no, I get that. Thanks for your answer. By the way, like, share, and subscribe. Also, if you have any questions, you can go into the chat and ask questions. We'll answer them here on air if we can get to them. So it's pretty easy to ask questions. All right.